Hey everyone, this is DayTraderRockStar, and tonight I am going to do a special educational video on a very important technique that I use in trading. It's called a 1-2-3 pattern, and what it is it really recognizes and teaches you how to trade a channel setup or a channel pattern. A channel is basically a range in which a stock is trading. When you pretty much look at a pattern or what we say, look at a stock chart, which we have right here, it's Discovery. These are a couple of stocks that we traded this week on Day Trading Radio. First of all, a little bit about myself. I am DayTraderRockStar, and I trade live each and every day on DayTradingRadio.com. And I have a methodology called the 5-indicator setup. And the 5-indicator setup is based on 5 indicators that I use. One of them is the stochastics, which is the main indicator. The other one is a lower, a trend line. A third one is a recognizable pattern. Fourth one is a moving average, and the fifth one is support and resistance. Now I also have some other ones that I use to help out with that. These are supporting indicators, be reversal candlesticks like a hammer here. And some other things that we could go over in other videos. But the important thing is the 1-2-3 pattern, which you'll probably be the first person I'll be the first person to start to teach you about this, and it'll be one of the most valuable lessons you'll receive in your trading career, because trading is what's important to learn about trading is that unless you're ahead of the curve, if you're behind the curve, you're going to lose money. So you need to be proactive in your trade. You need to identify a pattern that it's happening before it happens, and you can't be behind the trade. Trading is very important. Most people believe or have been taught to buy breakouts, to chase momentum, and that's actually really the wrong way of going about things, because you're actually trading into you're buying into strength where you should be buying into weakness. You should be selling into strength, and you should be shorting into strength and covering into weakness. So it's the opposite. But how do you determine that? And that's what really happens is you look at a chart like this, Discovery, which we've traded this week in the markets, and looking at a standard pattern like this, a lot of people look at this and they won't see much. But what I see, because of I started trading in 1993, from 1992, 1993 being full time. I started really establishing what I was doing right and wrong in the thing, and over the years, I've realized that stocks definitely trade within a pattern, and to recognize a pattern before it happens is the key point. So we have certain areas I call pivot areas. These are areas where a market will make a change between a moving higher and moving lower. All right, and this is called a pivot area. And here we have a pivot area where we have a pivot area here. We have a pivot area here. Basically, sometimes the pivot area could be choppy, but basically, we're looking at a pivot area. So we have 3 pivot areas here, and each one of these pivot areas we want to label. So the first label I'm going to call is a number 1. All right, and then we're going to go down here. We're going to call this number 2, and we're going to call this number 3. This is my 1-2-3 pattern. All right, and now this might take a few days to comprehend. I'm going to give you some examples on this, but it's a very important technique that you need to learn to be successful in trading. One thing I do on my show every day is stress the importance of being proactive in your trade, not to be behind the crowd. To be able to recognize a pattern when it's happening. Now, 1-2-3 pattern basically means you need 3 points, 3 pivot areas in a chart before you recognize your 4th pivot. The top 2 or the bottom 2 areas, this move down to here, and this move up to here. This represents 3 pivots. All right, this gives you that triangle. What I want to do is I want to take that first pivot. All right, I want to take that first trend line, drop it right through here. All right, that's the only thing I want to really concern myself with. The other stuff I'm just showing you, what the basis of it. But the 1 and 3 line here, it can happen the opposite ways. There's all different ways this can happen. And this is your first lesson on this. But basically, you have a pivot up here, a high, and you have a pivot here, And you can see even at this point we came down and we pushed back up. This really established this line. But the second period here, once we know that this third period here is, and we have this third period here, we know that all of a sudden we're starting to recognize this. Once we have 1, 2, and 3, we go back to 2. Once we have 1 and 3, we go back to 2, and what we do is we make a parallel trend line. All right, a parallel trend line is an equal distance line from the top line. This line is automatically put in here. This line, we're just going to draw this line parallel to that line. All right, so we just want to draw it parallel to that line. Basically, and when it comes down to that, we actually comes right down to that level. Actually up a little, it actually comes dead point onto that level. Now what you see here is the market pushed up against this trend line and it pushed down right to this level. Now we traded this level. We actually recognized this pattern using the 1, 2, 3 method. Saw the 200 period moving average here, which is an important level to watch. Started understanding this level right here is an important level to start to trade. From this level to this level, we're going to be watching. Now, started my position here, but also knew that the next day we were calling, because the most important indicator on the system is the stochastics, and the stochastics being oversold at this level up here. Timing with the lower trend line and the 200 period moving average, everything lining up here is very important. So what we did was, once we saw that there's a breakdown, we calculated this line. We knew this point, this 3760 area, 3755 area was a very important level. So once we got down into this, we started taking positions into this. When we recognized a reversal pattern playing off of this, we could confirm this channel, and we pretty much could confirm that this is a number 4 portion of this trade. All right, so this is very important. Now this becomes number 4. And then we know that this channel is intact and we're going to trade it to the upside. So it's an automatic money-making trade. Once you have 1, 2, 3, you can automatically buy off this long, but you need to be on top of this. And to be successful in trading, you cannot be behind the curve at all. You cannot be learning this on the go. You need to recognize these things before it happens. Or else you have no chance, There's millions of dollars being made in the market, and if you're not on top of it, it's not you don't deserve to make $1,000 or anything. To make big money in the market, you need to know how to make the money. It's just not like anybody can come into the market and make money. It's not meant that way. Stupid people are not going to make money. All right, I'm telling you like it is. If you have no concept of have no intelligence, you're not going to make money. You need to be able to see these things. You need to believe in them. You need to have confidence. You need to be aggressive. You need to understand that. You need to have discipline. You need to have patience. All these things wrapped into one is the only thing you're going to be able to become successful at this thing. Later on, you could trade off of 5. You could trade off of 6. But you need to recognize this stuff before it happens. All right. So we killed this chart. We killed this stock in the room this week. And the other one we do, and of course you probably know if you're probably getting this because you're on the thing, is the McDonald's trade. And again, the McDonald's trade is basically the same thing. We knew we had a quality stock, which is an important factor. Quality stock meaning stock that's in the public eye, has a good reputation, makes money. Is generally a bullish trade, and it's given us an opportunity on a pullback. Now this one, same situation. We had a couple areas here. We have, first of all, your first pivot area, number 1. It's the high here. All right. Now at this point right here, you can probably see that this level back here was number 2. Or actually, let me go back here. Again, I'm doing this on the fly because I love to teach on the fly here. I do this every day live on the radio from 9 o'clock to 4 o'clock on DayTraderRadio.com. So as these things are setting up, I'm teaching this as it's happening. All right. So once we had 1 and 2, you already have that, and then all of a sudden you got number 3. So once you had 1, 2, and 3, all you need to do is connect the dots. And what I'm saying is connect the dots is take the bar, push it down here. You take number 2. What do we do with number 2? We go back to number 2. We take the closing bar, and we just trade a parallel line here. Now, this is after the fact, but what I want to do is make sure this is an equal distance from here to here. Oh, excuse me. With that, I just pulled that off of there by mistake. All right, we've taken it from the closing bar, but I want to make sure that from the distance from here to here is equal all the way down. So this is a parallel trend line. So at this point right now, we're recognizing this trade and saying, all right, all of a sudden we get down to this level, and all of a sudden we want to take this trade right here, all right, into this trade on the lower trend line. We take that trade. Basically, it's stochastics, oversold, all right, indicator 1, lower trend line, recognizable pattern, even the 200 period moving average here. So this becomes number 4 in our trade. All right, we take the trade. Next thing you know, we're up big money on that. From 71 to 75. Well, not actually 71, 72 and change, all the way up to 75. So you have a potential 3 points on that trade. And then from this point on, you can even move further. So that's McDonald's off of that. Now, we also did another trade, a couple more trades that we recognized. This is Allstate that I traded. Again, a lot of you people probably are in the chat, on the station watching the live broadcast while I'm trading these stocks. So, Allstate was one that if you look at this trade, a lot of people are automatically recognizing this trade as maybe, all right, so you're looking at this trade, and it takes experience here. Honestly, it takes experience. A lot of people will be looking at, all right, here's the top. I'm going to drop this trend line down here, and you're saying, John, all right, this is very easy. I want to take this trend line from down here. I'm going to bring it up here, and we're going to look at this level down here. So I said, oh, yeah, John, I see this. Why do you like this area a lot? Well, a lot of people are looking at this level here, but they're not seeing the real pattern. I don't like to trade these big triangle patterns. What I like to trade is the oversold stochastics, multiple indicators. So an indicator for me is the oversold stochastic, underlying trend line. We don't really have that. Moving average, we do have. A recognizable pattern, we don't have. But the truth is we do have this. It's all about the way you look at it. So I'm going to get rid of these lines, and we're going to reevaluate this stock. All right, and it's something that you need to learn. You need to get experience. So once you start to realize that you have a gap, whenever you have a gap in a stock, that constitutes a new starting pattern. So you need to do that. So that's number 1. All right. Another pivot down here would be number 2. All right, and then the third pivot, of course, would be number 3. All right, so with 1, 2, and 3, all of a sudden we have 1, 2, and 3. We have something to work with. We're not even talking about up here because we have to remember that a gap represents the start of a new pattern. All right, so we take this pattern here. We even start from here, and we can actually already see the established pattern here. We have a good 1, 2, 3. We go back to the 2 line, and all we need to do is draw that parallel trend line. I want to move this down a little. All we need to do now, we have 1, 2, and 3. So what I want to do is take this level and just draw a parallel trend line. All right. And I want to bring this down here a little. And this actually works out really well. And we want to take the closing candlesticks here. There we go. And you can see the closing candlesticks is the important part. Closing candlesticks, not using the tails, where the bars, where the closing bodies are. All right, and then, again, I always kind of preach that this is not an exact science, so, it sometimes you get a lot of tails that are underneath it, but basically you're seeing an extension, you're seeing this parallel trend line, equal distance between this level and this level. So we go down here. So you have 1, 2, 3. Once we got down to this level, there was a lot of things happening. We have the oversold stochastics here. All right. We had the 200 period moving average, but we had the upward trend line right here, just based on the 1, 2, 3 pattern. So at this level right there, right underneath us, this is a very aggressive level. And we take this trade right here, and you can see that huge move off of this level, and it's basically because you have 1, 2, 3 recognizable pattern, 3 moving average, 4 out of 5 indicators. That's a high probability setup. That's a low risk entry, easy trade, easy money maker. Now, I cannot go into more detail and say you need to stick to your discipline. You need to take the trades when they come to you. when you start to chase a trade like this, most likely you get the pullback. Most of the amateurs get faked out of here. Stick to your statistics, stick to your trend lines, stick to your recognizable patterns. All right, very important. That's Allstate. A couple stocks that could be setting up into this. We already see Coca-Cola. We already have one. Possibly we have two. Possibly we have three here. It's two. Possibly we have three here. So again, we haven't had four yet. So we're going to draw this trend line here. From here down. I want to take this parallel line. I'm going to drive it down here. That means that next trade that comes down to this level, this is a trade I want to take. So showing you these trades that are happening beforehand. So if we get a pullback, we have a nice little channel. We already planned out this trade, and this will be a money-making trade. So probably around $61, we're looking at that trade. So Coca-Cola, KO. Allstate, Discovery, McDonald's, Coca-Cola. 3M is another stock that I like. It doesn't fall into this category. Just a good stock that's going into next week. I wanted to just share with you. A very strong stock, holding the 20-period moving average. Stochastic starting to turn back, looking for a break of $90. This is a great stock. 3M, a good stock. MMM is the symbol. You could capitalize that if you want. Now we have lots of other stocks out there, but I wanted to basically go over and go over once again the 1, 2, 3 pattern. So we gave you 3 good examples of how to develop a channel, and the channels are one of the best tradable patterns out there. The Discovery that we traded this week, textbook. The McDonald's that we traded this week, textbook. Allstate traded this week, textbook. PGR, I didn't even mention this one. Progressive. This was a nice little wedge pattern. Once you start to look at it, you have the experience, you're starting to see the stochastics, how they rotate here. You can see their stochastics here. The stochastics here. All right, you can see some points here. All right, so once you start to see these points play out, you have these trend lines. You have 1, 2, 3. Then you start to. All right, so here's your 1, 2, 3. One being up here. We could go back. I never even used this 1, 2, 3 pattern on here. I just noticed the wedge pattern on this one personally. 2 and 3. I'm just going back. I never even back tested this. We just draw that parallel line here. All right. And you can basically see the same setup here in Progressive. Nice little wedge pattern. Again, not an exact science. There's a couple bars. You might be a couple of cents off of the lows, but basically you want to establish the recognizable pattern. The stochastics lining up perfectly on the lower trend line. 1, 2, 3 pattern. Not even using that for that. By the time this approached the 1, 2, 3 pattern, we're in this trade. But what I recognized here is the oversold stochastic lower trend line. Look at how we pushed right up against this. All right. So 1, 2, 3, 4, 5, 6. You can continue to trade this. Looking for that breakout on this. This is PGR. This is another great setup that we took this week. PGR. So hopefully you gained something from this video. It's called the 1, 2, 3 pattern. It's one of my most important techniques in finding charts before they happen. Remember, that's the key word. Finding the setups before they happen. You do not want to be chasing a stock. You don't want to see something as it's breaking out to new highs. Believe me, been there, done that. The only way to be successful is to have a methodology that enables you to take a lower risk entry. I will pound this into your head each and every day you come to the site. I will pound it into your head. There is no better way to trade. I don't want to sound too confident or anything, but it's just proven. It's just a proven fact that you lower your risk, you take your entries on the pullbacks and bullish patterns, you're going to get that bounce, you're going to make more money. All right, instead of buying into strength, you're buying into quality into weakness. It's not weakness, it's a pullback. It's an organized pullback. It's an organized trade. Very easy to trade. All right, but you have to have your mindset towards that way. There's a saying out there that maybe 98, 99% of traders don't make it. It's because you don't have a methodology. You're not taught. People go into things. This is a big secret out there. I'm surprised they don't come knocking on my door. The mafia doesn't come on. I'm not giving out too many good secrets here. Honestly, I'll make fun of it. I don't care. Hey, my record speaks for itself. Come to DayTraderRadio.com and check it out. You won't be disappointed. I'm out of here. Have a great weekend, people. It's the 1, 2, 3 method on how to trade a channel. It won't go wrong. You can't. I have nothing more to say. Enjoy it.